Hello, folks. Let's look at the reversal patterns for today. Let's just do this. Okay. So, NQ, regular trading hours only. It kind of danced around, took out that high, and then started this meander down. Took out opening range low, went back up. I think it left that. Yeah, it looks like relative equals, and then pushed down again. Put up a reversal pattern here. The last up close candle is this one right here. Fair value gap. I entered here. I didn't know where to aim, but I believe I aimed for those. And I got about 20 points there. I'll show you here. Just to that high, 19 quarter, about 20 points roughly. But then we didn't continue up. I think actually I was expecting to go higher, and I put my stop at break even. I don't think I even made that. I think I made about $4 on that trade. But then we double tap the low. We make a new low. At this point, I'm like, okay, I'm going to go short. We had this to the downside, a fair value gap, looking good. Went short, got smoked. Pissed off. Now, I'm really mad. But if you turn it to this 15-second chart, this second time we double tap the low. That gives us a new breaker. On the 1 minute chart, the breaker's way up here, and we don't really get an opportunity to enter. But on this 15-second chart, I'll move this guy over here and delete that one. And we can see a little bit better. A lot of times when it moves fast down like that, I'll change to a 15-second just because ICT does it, and I figure he knows what he's doing, so I'll do it too. And so we use that fair value gap. It's the one that pushes through the breaker. We tap, you get an entry there. You get an entry here, there. And we did not slow down the rest of the day. We went on up from there and just continued to make all-time highs, one right after the other, all the way up to, wow, that's going a long way up. All the way up to there. So how many points would that be if you got in there? I mean, I don't even know what to aim for at this point. I mean, we're just going to the moon. So we get in here at the top of that fair value gap. There was roughly 200 points on the table there. On one micro, that's $400. One micro. I think aiming for the high of the day would have been a smart move. That wouldn't have been quite as many points. It was a relatively small range, but that would have got you $130 on one micro. Not bad. Not a bad day. We did have this reversal pattern up here. If you look at it on a 15-second chart, we double tap the highs again, made a higher high, and then we did put up a reversal pattern here. So this would be our breaker, still on a 15-second chart. We'll see what it looks like on a 1 minute chart in just a second. And then that would be our first fair value gap, which we don't really get an opportunity to enter there. The only one we get an opportunity to enter is this one right here. So we could put a box on it. Seeing all that in real time, I was watching it because I did take a short here. And it was making me a little nervous there, but I was doing it on the 1 minute, so let's switch to that. Okay, so on the 1 minute, we push up, we make a new high, and then this would be our breaker right there. Same fair value gap. Not very big. On the 15-second chart, we had an entry, but on this one, we didn't get our entry. This is our next push up. No fair value gap. So the 15-second chart would have been good for that too. Maybe that's the key to trading Nasdaq right now. It's so volatile. It's so difficult to get in on a trade. And I just keep getting stopped out at break even nearly everything I enter because I want to go to break even right away. I don't want to leave that risk on. But that was a nice little push down. Not a ton of points, but at 70 points or so total. If you got in with the 15-second, you'd have been doing all right. let's go get the MES. I want to show you what happened over there. I've been looking at ES a lot more just because I think the signals have been cleaner, to be honest, and it's not quite as volatile with its moves down. But look at the difference. NQ went up and then down and up and then down, and ES just made a straight march to settlement. Came down here, put the opening range low here, and then we came and we poked it. That's that Nasdaq's push down right there. And from there, that gave us our lowest low. This is our breaker right here. The last up close candle before the run on liquidity. We came back down, made a higher low. Still have not validated the breaker, and we validate it right here. Pushed through with a fair value gap. And we came back down to it. We touched it there, almost there. My entry would have been one tick above. It was. Well, no, I think I'd already gotten pissed off and left town by this. I got out of here. But one tick above this candle right here. The one tick above the low. So the low is 69.12. So I would have put my entry at 69.12.25. And that would have given me plenty of room. When you're trading ES, on one micro, it's $5 a point. So 5 points, $25. I mean, there's only 3 points there. You would have been fine. That's great. You could get all the way down here below the low of the day and still only have a $50 risk on that thing. That's one good thing. Let's see if I can get a better picture of that. So I'm entering there. Down below the low of the day is 8.75. So on 10 points with one micro, that's $50. If I'm calculating that correctly. So you would have been fine if just with one micro, 2, 3 micros, $150 risk. And we respected this fair value gap. Candle bodies did not pierce the bottom of it. Wicks can do it. It's all right. But with your stop below the breaker even, you would have been just fine. And what did it do for the rest of the day? It did a little bit of scary stuff right there. It made you think, well, maybe not. High of the day profit target on one micro. Let's see what it would have been. Looks like 16 points at $5 a point. Man, I don't know if I can do this kind of math. That's $48 on one micro. And I usually do, if I do one NQ, I do 2 of these or sometimes 3 of these, and it'll be about the same. So 3 of them would have been $150. Not bad if you took your profit at the high of the day. Once this pushes down, you could try to get back in one of these fair value gaps here if you wanted to. Or you could just say, you know what? We're making all-time highs. We're going to let this one run a while. I don't know where you'd be aiming for. That's the hard thing about all-time highs. It can reverse at any time. But it did put up 32 points. So that would be double what we had before on one times. That would have been $360 roughly. If you held it all the way and just top tick killed it, would have been, about 160. So not as much profit potential on one micro, but you could do 2, 3, 4 micros and really get your profit potential up there with cleaner reversal signals. The reversal at the top, let's take a peek at it. So here's our breaker, the last down close candle before the run up. Be right here. And this is on the micro contract. The bigger contract may give you better signals. I don't know. I'm a little off on my line. So it just started falling out of bed. We didn't really get an opportunity to enter until right here. Now, if we go to a 15-second, there may be a better op. Let's see. So yeah, the 15-second does provide a little bit better opportunity when it's falling fast like that. Change to it. Not going to hurt anything. So we put up a fair value gap coming down, put up relative equal highs there. Fair value gaps pushing away and through the breaker, and a to the tick touch right there. Entry would have been here at 69.4050, one below, so 4025. And then aim point, I would say probably this wick right here looks like a good one. Those are pretty much equal. Not a lot of points, but hey, anything in this market is better than nothing. So we got in there, aim for that one. 6 points. So that's what, $30 on one, $90 on three, 120 on four. Not terrible. You could have even aimed a little lower down to this. These are kind of relative equal, so you could have aimed down to here and got a couple more points out of the deal. Well, that's it. I heard gold had some good, clean movement today. I didn't look at it, but maybe I'll add that in one of these days. But we did have some nice reversals today. They were just long awaited. This one is this one was the best one, and I missed it because I took a trade overnight expecting us to fall out of bed, and we didn't. And so I ended up losing that trade in the pre-market. And so I was in the hole, and then I took a couple of trades here and got down another $100. And then I made up $100 at the end of the day. So I've had 3 losing days in a row trying to trade this, trying to get a reversal on these all-time highs. I'm not doing well right now, but I'm keeping my size small so I can make mistakes like that and still have an account. And I'm going into, this is my 4th week on this XFA. I'm qualified for a payout, but I want the payout to be max, so I'm not taking a payout yet. And that's the longest I've ever held an XFA. My goal on this one was, I told myself, professional traders do not blow up their account every other week. They don't do it, or every week. They're disciplined enough to keep their size small until their account is big enough to handle size. And so that's what I went into this XFA saying to myself. I know you want to trade those minis. I know you want that big dollar amount. But even trading these micros, my max size right now that I will allow myself to take is 4 micros on the NQ. I can do as many as 8 on the MES and have the same dollar value roughly. But 4 micros. And with that, my good days have been really good. I've had a $2,700 day, and then I lose $400 because I have a DLL in here now too. That's what's saving my account. Maybe I lose $400. Next day I lose $200. Next day I lose another, and I'll whittle it back down, and then I'll have a $1,200 day. But these conditions right now are not producing the type of signals that I like to see, and I'm trying to force trades in there. And so that's what's causing me to have, I'll have a great day, and then I'll have 3 days of drawdown. Last one I had a great day, and I had 4 days. I had one good day out of all last week, one good day, and one green day. I think I had a couple of green days, but they weren't qualifying days. One of them was like $95, and one of them was $50. Nothing to write home about. But the fact of the matter is, I'm keeping the account alive. Learning to trade in a much more disciplined manner instead of swinging for the fences, trying to get a home run day every single day. I'm just keeping my size small and trying to make consistent profits, because that's what's going to make your account last, where you're not having to go pay another $150 every 2 weeks or every week, however long it takes you to get funded again. So I don't have a problem getting funded. I got funded since May. I went back and counted. It's been 18 times I've been funded. 18 times. And 17 of those times I blew it up within 2 weeks. That ain't right. And the only reason I blow them up is one bad day. So I'm eliminating the bad days with a DLL, and it's working. If you're having trouble with that kind of stuff, employ that strategy. Size down, put in a daily loss limit. I know I'll eventually catch that good trade and I'll make up all that money I lost. But some days, that one bad day, you don't, and boom, your account's blown. So put those safety measures in place. They're there for a reason. It's not because every trader in the world is disciplined and they can just stop themselves whenever they're having a bad day. That's not why they have those daily loss limits. You know, they have them there because every trader struggles with this stuff. And I've developed bad habits along the way where I've been down $2,500 in a day and made it all back and an extra 2,000 on top of it. And when you've done that, you're like, I can do that again. The market's not going to always give you that opportunity. Number one, you should never get down $2,500 on an account this size. Number two, if you're making $5,000 turnaround in a day, you're trading too much size. Any given time, these accounts, they're $2,000 accounts. Any given time, you can blow them up with a mini that moves 100 points against you. So size down. Give yourself some opportunity to be wrong a couple of times. You know, with one micro or two with $100 stop loss, you can be wrong twice and still recover just fine with a 100-point move. You know, I still have a $200 day. So if you're struggling with blowing up stuff, blowing up your accounts, try that. Size down, put in a DLL, and leave it. Stick to it. Use it as your self-imposed discipline. I guarantee you, you'll stop blowing up accounts. And you can still make plenty of money with micros. All right, that's it. This one's a little longer than normal, but hope y'all get a benefit from it. Talk to y'all next time.